Hi guys, Harry Yotis here, professional trader for 20 years now. Started in 2005 and still going strong in 2026. So, let's get started guys. Today is Friday, the last day of the week, January 23rd. One more week left in January, and the big news of the day is Banzai, Japan. Japan coming into the mix. We'll talk about this later. But from now on, let's talk about the technical picture. We always talk about the technical picture of the S&P 500 daily chart. Still bullish. Let's bring in the moving averages. Still trading above the 50. We're consolidating here. Everything is setting up beautifully for a next move higher. Series of higher highs, higher lows. And we mentioned that the VIX is still staying muted and low. Okay, and I think it continues to drift lower as we head higher. So SPY, the technical picture is bullish, and we cover the gap. Everything is like written in stone at this point, technically speaking, bullish. Fundamentals still bullish, and we always look at the sentiment. What does the sentiment say today? Not a big change, 52, about the same. We still have fear, extreme greed in the strength here, all the sub indices, and we still have extreme fear in the put call ratio. So nothing has literally changed. We were bullish yesterday for all three reasons: technical, fundamental, and sentimental, I guess. And same today, no difference. Okay, so let's get to the big news of the day, which is Banzai Japan coming in. If you guys recall, a couple of days ago, the big drop on Monday was due to Greenland and Japan. Okay, Greenland because Trump was talking about tariffs and taking over Greenland, but also Japan. We mentioned that there was, if you look at the Japanese 10-year, for example, the 10-year yield, they were spiking. Okay, and this freaked people out because the carry trade is over and Japanese yields blowing up means the carry trade is over, and it's going to be bad for the market like it was for previous carry trade blowups like here. Okay, so the yields are up, but does that mean the market will crash? No, because we mentioned that I don't think the carry trade is that big of a component of world markets. And a parallel to that is not just the yields, but also the Japanese. Everything about the Japanese market is a little bit teetering on the edge, but they're talking about the Japanese yen. So the big news is that the dollar crashes from zero hedge. The dollar crashes as the yen soars after intervention chatter grows. Okay, so what does this mean? Okay, so here, chatter about a potential intervention overnight in the Japanese yen is growing and has sparked a dramatic bid for the Japanese currency against the dollar. Okay, what does that mean? Okay, so let's go to the Japanese currency. Okay, boom. The Japanese currency, this is the US dollar, this is the Japanese yen versus the US dollar in dollar terms. So as of yesterday, it was trading at 158 yen per dollar, and now it's 155, a dramatic strengthening of the yen. Okay, the intervention means that they think that the Bank of Japan or whatever is going to come in and start, intervening to prevent the yen from getting destroyed, which means, buying yen with US dollar. And if you see the Dixie, the US dollar index is down, okay? Because, stronger yen means weaker dollar, okay? So because of that fact, because of this strengthening in the dollar, weakening of the dollar, strengthening in the yen, it crashed the dollar index, okay? And in case you're wondering why this matters as an equity trader, here's why, okay? SocGen, Société Générale, since the summer of 2024, equity market sell-off, okay, we mentioned that sell-off, the Japanese carry trade was being unwound, okay? Since that sell-off, there has been a curious relationship between the Japanese currency and performance of short-term equity volatility in the U.S. In other words, if the stronger yen persists, like a stronger trade-weighted yen will be an important catalyst for a risk-off sentiment in the broader equity market. So they think that as the yen gets stronger, it's going to put pressure on the U.S. markets, and the market will tank. So because of that fact, because of the strengthening yen is bad for equity markets, you saw, let's go back to the S&P 500. I'm going to dig deep into this candle on January 23rd, 15-minute, okay? it tanked it. As this news came out, the markets were tanking, okay? Recovered a bit, tanked again. Okay, they were scared that the Japanese yen strengthening would be bad for markets as it was back in 2024. But then it quickly recovered. Okay, so they basically where was the day? I think I was looking at the wrong day here. This is Friday. Okay, so in the morning it went down. Okay, the market went down from 690 to 686. Okay, but then it was quickly bought back, and the whole market was basically sideways for the whole day. But this down move was because of the yen move. Okay, so as I mentioned before with the Greenland, I don't think this is going to be a big deal. Okay? I don't think it's going to crash markets. I don't think it's going to have anything to do with the U.S. equity markets as they suspect. Okay, because of the fact that there's not that many people in the carry trade, and I don't think the Japanese yen, quote unquote, is going to destroy the U.S. economy, because as we saw before, they revised GDP upward 4.4% in Q3, and it keeps getting stronger. There's anything about the U.S. market that is going forward looking bad. Like jobs are holding, market's still doing strong, and people are still always 1 foot out the door. So any kind of bad news is going to try to tank this market. And I think this market gets more resilient as bad news gets disseminated. And as we go further and more bad news happens, I want to see the fact that the market completely ignores it and keeps ripping higher. In other words, I want to see it go into the greed and extreme greed without care of any bad news. Right now, bad news, they do care. Okay? I want to get to the point where they don't care. Then I'll get worried as a bull. Okay? Because right now, everything that is coming out is an excuse to sell, and is being bought back quickly. So that is good. Okay, and that's what I want to see. So I don't think Banzai, the Japanese, are gonna suicide this market or unalive this market. I guess I shouldn't say that. So, guys, don't worry. My view on this is that it's a nothing burger. It won't happen. And I don't think this market gets tanked because of the Japanese strengthening of the yen. Okay. So the last thing I want to talk to you guys about today is silver. I know I keep bringing it, but it just keeps going up. People are waiting to short it. Now it's at 102. Okay. If we look at the price of China silver, which Shanghai silver price is in dollars, okay, it's at 112. Okay, literally the gap. Let's go back to the gap. Let's go silver price. The gap is getting wider. See, here it was very tight. Here it's getting wider. It's getting to the point where we don't know where it settles. Okay, at this point, you stay back, you watch. You don't try to time a top. Okay, and you might be you should be selling slightly into it. And I do have a covered calls that I sold on my silver position, on a small part, not all of it. Okay, because I really don't want to get out of it completely until this breaks, and it hasn't broken yet. Okay, and even if it breaks, I don't think it's going to settle at a higher price. Okay, as we mentioned before. So don't try to time here. The people are trying to time tops here. The first down move after a big move, they're trying to go short. Don't go short. Premiums, especially with options, premiums are very, very elevated. You're not getting a good risk reward. Okay, and in a blow off top, you don't know where it's going to go. Okay, the fundamentals really haven't changed. I keep posting on X how the deliveries keep increasing. Physical deliveries for the CME keep increasing. The COMEX keep increasing. So we're not out of it yet. The fundamentals are still very, very bullish. There's still a real squeeze going on. There's real demand for this critical metal. Okay, so we don't know. Wait, it could go to 150. You have no idea when these parabolas happen. I mean, guys, remember GameStop? Parabolas can go to crazy levels. Crazy levels. I thought $75 for GameStop was huge. It went to 300. Okay, I'm not saying that's going to happen here, but you just don't know where the blow off top could be. It could be it's 102 now. Silver. It could be 150. It could be 200. You don't know. Okay, you should be maybe selling a bit on the way up, but wait. Do not short it. It's too vicious. Premiums are too high. If you want to go via the options route, you're not getting a good risk reward. So the smart play is just to wait. Or if you really, really want to risk it, you can sell deep out of the money call spreads, but that's still very risky. Okay, that's the only option that I would even consider if you want to short it. I do not. So what I am doing, I'm selling covered calls on a portion of my position. Okay? That's what I'm doing, because I'd be happy to get to piecemeal my way out of this as it spikes up higher. Okay, and then waiting to re-enter on a pullback. Okay, so that's it for silver, guys. Wait, don't do nothing. Like, doing nothing is the best move at this point. Okay, so let's recap. Okay, SPY, bullish, covered the gap. Everything is looking great. We don't have to worry about anything. It's above the all the moving averages. Don't do anything. Okay, don't overthink it. This is a bullish trend. Fundamentals are bullish, and sentiment is still not in extreme greed. I mean, you can feel it. You don't even have to. You don't have to look at sentiment. You can see that every piece of bad news is coming out, and the market is trying to react to it. Okay, I want to get to the point where bad news comes out and nobody cares. Nobody cares. Okay, all you're going to see is good news. That's the point you should be worried about. Okay, we went to the carry trade, not the carry trade, but people thinking that there's chatter growing that the BOJ is going to come in, or Japan is going to come in and strengthen the Japanese yen, intervene in the Japanese yen. What is it here? JPY, USD JPY. And that's what did this. Okay, this is the Japanese yen getting stronger because people anticipate there's going to be a intervention. Okay, whatever. I don't know. I just don't think this move will affect SPY in any big way, as it hasn't in the past. Okay, SPY, the U.S. economy is much stronger than people think, and I don't think it has any effect going forward. And of course, silver, wait. If you must play it, sell deep out of the money. Credit spreads. If you must go short, I don't recommend it. Okay, I really don't. At least your risk is defined there, but don't buy outright puts, and don't try to don't be a hero. Don't step in the way of a train that is coming at you and you got nothing. The train has a fundamental trend, real fundamentals going behind it. This isn't this isn't a penny stock that you see a parabolic move that people try to short into it. It's not a penny stock that has no revenues, no earnings, no nothing. It's not a piece of crap company. This is a real thing. Okay, don't try to time tops on these real, fundamentally driven, quote unquote, parabolic moves. Okay, because this is not yet parabolic. It's 45 degrees. We're in the middle of the parabola. Okay, we don't know where the parabola will end, is what I'm trying to say. Okay, so just wait. So that's it, guys. If you like what you see, or heard, of course, like and subscribe and leave a comment below, and I will get to it as fast as possible. Great close to the week. We had a great week, and we're looking forward to the next week, which should be the last week of January. If it finishes much higher, I suspect the year is going to be fairly good. Okay, so that's it, guys. Later.